Hello and welcome to another edition of Investing for Generations. So, right now, we are just in the middle of the earnings season, in a very interesting earnings season because Q2 was the first quarter where the pandemic situation really took place. And we will take a look today of the earnings of the companies in my portfolio and see how they survived these very difficult times so far. And at the end of the video, I will give you also insight of my portfolio and the performance of my portfolio. So let's go. But before we start, I want to say thank you to my currently 168 subscribers. And just in July already, we have 93 subscribers. Subscribe to the channel, give me a big thumbs up, and hit together the 100 mark of new subscribers just in July. This would be very amazing and exciting, and I'm so happy and glad for everyone who joined me on my journey. Yeah, just let's grow together and go together this path and have fun. Then dive deeper into the earnings of Q2. And since my last video, the following companies just published their earnings for Q2, and this is AT&T, Pfizer, Travelers, American Express, and Coca Cola. Then let's start with all these numbers, and let's start with Coca Cola. Coca Cola had in Q2 earning of 41 cents, which is a big decrease by almost 33% to Q1. But even with this high decrease, they still beat the estimate earnings by 2 cents or 5%. So it looks like the things are bad, but maybe not so bad as estimated. But of course, for Coca-Cola, it's a very difficult situation because with a lockdown and the closing of almost every movie theater, parks, and whatever, Coca-Cola is very hard hit by the lockdowns. But Coca-Cola hopes to improve the demand again and hopes that Q2 hopefully was the worst quarter this year. And this hope comes together with the ease of the lockdown, of course. And since they published their Q2 earnings, share price just rises from $47.20 to currently $48.33. So it looks like the market really is positive surprised. Then turn on to AT&T. Also AT&T have a decrease of the EPS by almost 22%. But what's very nice is that the cash flow still in the depth of this pandemic and recession is still very high with $7.6 billion. And also AT&T beat the consensus estimates by 5 cents or 6.41%. With this still very high free cash flow, AT&T just pay back a lot of long-term debt, which is a very nice sign because one of the concerns with AT&T is their high long-term debt. And so this is very good that they are able to pay a lot of them back and just decrease the long-term debt. The stock price almost don't move since the publishing of the Q2 earnings. Overall, it just goes sideways. But as I said, AT&T, it looks like AT&T is on the right path with a payback of the long-term debt, with the start of HBO Max. So it looks like there could be a bright future. Then move on to Travelers. Travelers is the only company who have to publish a loss in Q2 of 20 cents per share. And of course, that's a very huge decrease compared to Q1 or also to Q2 in 2019. But even with this loss, they still hit the consensus estimates. And what's still very nice, the dividend seems very safe. Even with this loss, the payout ratio is just at 35%. and the next dividend will be paid on September 30th of 85 cents per share. The stock price decreases a little bit from $118.61 to currently $114.83. So, of course, this quarter was really a hard quarter for travelers and for all the insurances. But hopefully, the future will be much brighter and travelers will earn money again. I'm very confident about that. Then the next one is American Express. And also American Express have a big decrease all over the numbers of revenue and EPS and net interest income too. But still with this very high decreases beat the estimates by far. So the consensus estimate was 13 cents per share and they reported earnings per share of 29 cents, which is a surprise of 16 cents or 123%. And that's really a lot. So it looks like the market really expected the worst. And the share price almost reacts none. Even there was this big surprise. I'm very happy with American Express and with this company, and I'm very happy to have my shares of it. All is fine, and as I said before, even in the depth of this pandemic, American Express still make money, which is a very good sign. And then, last but not least, let's go to Pfizer. Pfizer published the numbers yesterday, and also Pfizer have to publish decreased numbers. But also Pfizer surprised the estimates by almost 22% with a earnings per share of 78% in Q2. And the stock price just jumped up yesterday, so it looks like this was a nice surprise. And of course, with Pfizer, there's also the fantasy of the coronavirus vaccine. And so Pfizer and BioNTech begin large-scale trial of coronavirus vaccine. And it really looks like Pfizer and BioNTech are very close to find a solution, to find a vaccine. And it seems like they are the closest right now. And of course, this gives also a kind of fantasy for the stock price. So what's my conclusion then? My conclusion is that obviously I have companies in my portfolio which can make money even in the worst times. That's very good. That's for me a very good sign and let me sleep very, very good and very quiet. And if they can make money even in the worst times, they will be able to make even more money when we come back to normal life. And that's very nice, of course. Then take a look also in my portfolio. So here we can see an overall view on my portfolio and every company in my portfolio. And as we can see, there's not a lot of movement in the last week. It's almost the same picture as last week. So not a lot to say about that. And also in the last week, I didn't receive any dividends. So also on this front is nothing new. So let's also take a look at the performance of my portfolio. As most of you maybe know, I started this portfolio at the beginning of December 2019. And since then, the portfolio have a performance of slightly over 19%, which is an outperformance of the S&P 500 of around 15%, which is nice, and which is even more nice when you think about that most of the S&P is driven by the high tech companies. I'm not so much into the high tech companies. I have a little bit of Facebook, of Intel right now, of course, and maybe Autodesk, but at all, there's not so much tech in my portfolio. And I'm even more happy that I can outperform the S&P 500 so far. So that's it for today. If you liked the video, give me a big thumbs up. subscribe to the channel, ring the notification bell to never miss another video again, and remember, subscribe and let us hit the 100 subscribers in July. Thank you, all of you. See you the next time, then with another analysis of the Warren Hood Top 100 stock. See you then. Take care.